Welcome to today's episode, Ackman versus Icahn, the Herbalife battle that shook Wall Street. Now, in fairness, shook might be too strong of a word, but it definitely gripped Wall Street and the business media as billionaire hedge funders Bill Ackman and Carl Icahn publicly feuded when Ackman took a short position on Herbalife and Icahn took the other side of the bet. You see, there was prior beef between these two billionaires. So in this episode, we look at the history behind that. We look at Herbalife and the whole MLM or multi-level marketing business model. And we dig into why Bill Ackman is so polarizing and how it is probably his personality more than anything else that trips him up and is likely to do so again in the future. It's a cracking story. And as always, there's a link underneath the podcast that brings you to an article on this episode. And at the start of that article are links to our main sources and some of the videos of Ackman, Icahn, the Herbalife CEO. They're well worth watching. So enjoy.
And just before you jump into the episode today, I want to apologize for the sound over the last 12 months and for the sound today. It's a bit patchy. We're not sound engineers and we're recording remotely, both of us. So we will get it right at some stage. We're working on it. So appreciate your patience and enjoy the show.
Morning,
Good
Keith.
morning,
How are you?
Cayman. How are you?
Not too bad. Not too bad.
Good.
And today our story it's the story about Herbalife, about the short bit that was taken on Herbalife by Bill Ackman and Carl Icahn, and about the big public feuds they got into as a result of it. It's a great story, isn't it?
Yeah, it's a great story. Full of likable characters, that's the great thing about it.
There isn't... actually, Icahn I like.
So do I, actually.
Icahn,
Yeah.
I like Icahn. I mean, he's a ruthless, tough New Yorker. You wouldn't want to get in his way. But out of the characters that are in this, he is definitely head and shoulders in terms of likability above the rest of them.
Yeah. Well, yeah. I'll moderate my views maybe a little bit, but I think there's not much comparison really. I like Icahn as well. He's a very likable character. Yeah. I do. I think in terms of even the interviews, there's a charm there. He's unapologetically tough. Ackman maybe not so much. But anyway, yeah. So maybe just to sort of go through it a little bit, what drew you to the story? What was the inspiration behind choosing it, and what attracted you to it?
The trigger was Ackman, of course, is becoming so high profile these days. He's on Twitter all the time. He's got a huge following, and he's obviously loving all the adulation and the press that he's getting. And so he popped up over something or other. It could have been the whole Palestine-Israeli issue. I don't know. And that just got me thinking about the documentary I saw, Betting on Zero, on Netflix, which is covers the whole Herbalife short that he does. And I just said, yeah, okay, this is a great story. I knew Carl Icahn was involved in it, although he doesn't appear much in Betting on Zero. And I thought, okay, we're not going to get too much into Carl Icahn here because he definitely deserves an episode or even a two-parter on his own. He's brilliant. So that's what got me into it. And then in terms of sources, there was the documentary. I rewatched that, Betting on Zero. I read the book, Scott Wapner. It's called When the Wolves Bite.
Yeah, so did I, yeah.
Very good book.
Yes.
Nice, short, but really, really interesting. And then there was two fantastic articles. William D. Cohen, who always writes great articles in Vanity Fair, he had a huge article called The Big Short that really goes into the character of Bill Ackman. And then Roger Parloff in Fortune had a huge article as well on the siege of Herbalife. So great detail in there as well. So it is just a fantastic story. And I suppose, look, in this story, we really will be digging into Ackman's character because, as always, whenever Ackman's involved, he's always the star of the show, And I just want to preface it by saying, we're going to give him a kicking, but he's not Putin, he's not Hitler, he's not evil, but he just puts himself up on such a pedestal of self-righteousness and morality that when you scratch the surface, you can just see the hypocrisy behind it all, that he really sets himself up
in our school, as they'd say, he's looking for a baiting, and
Yeah.
he really is. Um, so I suppose we'll get into it, but before we do, there are some quotes that I want to just give our listeners to give an idea. These are people who know Ackman and who had dealt with Ackman, and they come from the William D. Cohn article in Vanity Fair. So the first quote says that there's a saying in this business, often wrong, never in doubt. Ackman personifies it. He is very smart, but he lets you know it. And he combines that with this sort of noblesse oblige, that lots of people find offensive. And on top of that, he's pointlessly, needlessly competitive every time he opens his mouth. Now, I know some of our listeners are a lot more educated than me and they'll know what noblesse oblige stands for, but I didn't, so I had to look it up. And it's a French expression that means that nobility extends beyond mere entitlement, requiring people who hold such status to fulfill social responsibilities. And Ackman does give out that
Mm.
feeling that he's doing this for the moral good, Isn't that the feeling you get from him that
Yeah, certainly he tries to portray quite an obviously mercenary endeavor to short Herbalife and influence their share price as the greater good and saving, less privileged investors than he. But it's quite clear that's not what he's at all.
it's very clear that that's not who he's at. He's an out and out investor, and
Mm.
he tries to dress it up as a moral crusade. And there's a quote I have from him here, which really just it personifies what he's like and what he thinks of himself. Really, he says, "I'm a change the world guy. I don't like investments that are not good for America."
Oh
And
my
you're kind of
God.
going, Bill, you're a money man. You're not a change the world.
No, and
You don't create anything,
no, and
except wealth.
yeah, and he did a lot of property investments. I mean, with
He
no
did.
disrespect to property investment, but how does it change the world?
I know. Sure, he made his money on the likes of McDonald's, Chipotle, Alphabet. Like, okay, investments, but not change the world kind of stuff.
My God. So he's
But there's another.
humble.
Oh, humble is not what Bill Ackman is at all, because this quote, and then we'll get on to the story of how this all started. But this is a great quote again from the William D. Cohn article. And if anybody has seen Bill Ackman in action, they'll understand the description here, especially the puckering his nose bit. So this is it. He's just pompous and arrogant and seems to have been born without that gene that perceives and measures risk. He seems to look at other members of society, even legends such as Carl Icahn, as some kind of subspecies. The disgusted,
Oh.
annoyed look on his face when confronted by the masses beneath him is like one you'd expect to see from someone confronted by a homeless person who hadn't showered in weeks. You can almost see him puckering his nostrils so he doesn't have to smell these inferior creatures.
Oh my God.
So that's from one of his former friends. And this is a theme that runs throughout the story and actually adds to the story and adds to Ackman's woes as the story goes on, is that he seems to fall out with friends an awful lot because of this attitude that he has.
Yeah.
Um,
That's a
so anyway,
fantastic quote, actually.
it is.
It's
It is. It is.
vivid.
It is. It is. You can, because when you see him in action, you can
Mm.
see actually him nearly puckering his nose when
Yeah.
he has to deal with people beneath him. So let's get into the story. So Ackman himself, he comes from a wealthy family. They're
Mm.
involved in real estate, and he was very much influenced by Warren Buffett, and he kind of tried to model himself
Yeah.
on Buffett. But he's no Buffett. His ego and
No,
vanity
no, I mean,
just
humility, everything from the legendary sort of the car Buffett drives to,
yes,
a bottle of Coke. Right. I mean, he's a Coke investor, but still you have an image in your head of somebody spends their time playing bridge and yeah,
yeah,
yeah. But,
yeah,
he's inspired by him to a degree, I suppose, inspired by his
to a degree.
success, maybe.
Yeah, but his ego and vanity just keep getting in the way. It's interesting you should mention that Buffett is a big investor in Coke and drinks a Coke every day, because Ackman famously came out and said that he wouldn't invest, he never invests in Coke because Coke is bad for you. Now, this is despite the fact that he's made a lot of his money off McDonald's, Wendy's, Chipotle, fast food places that not only sell food that's not very good for you,
But
but
soft
that also
drinks.
sell Coke. Yes, I know, like his hypocrisy. But anyway, so at the age of 26, he gets involved. He starts up a company called Gotham Partners with a friend of his from college called David Berkowitz, not the son of Sam. This is a different David Berkowitz. And they raise $3 million from friends and family. And they do well. Within 10 years, the fund has $300 million in assets. But then they get involved in a golf company, an investment, and it turns bad. And instead of bailing out, they double down, and it leads to them having to unwind the partnership. And two vital things come out of this unwinding. So these two things are very important to the whole story. The first one is that he has shares in a company called Halwood Realty, and he bought them for $60, but he knows they're worth a lot more. And so does Carl Icahn. And so while we're not going to really get into Carl Icahn in this episode, just to give our listeners a very quick overview of him, he's this legendary, ruthless corporate raider and investor who made his name back in the 70s for taking large positions in companies. And sometimes he bought the companies like TWA, but an awful lot of the times the companies would just pay him a premium just to get rid of him. So he got a name as what was called a green mailer. Now he lost that tag, and by the time we get to this story in the early 2000s, he had set up a hedge fund, making really good returns. So he's very, very well known. You wouldn't mess with him. And we will definitely do an episode on him. But getting back to Ackman. So he approaches Carl Icahn and says, look, I got to get rid of these. I'm unwinding my positions. Can we do a deal? So they do a deal where Icahn agrees to buy them off Ackman for $80 a pop. But he also builds in this thing called a schmuck insurance. I love the name schmuck. It's typical Carl Icahn. And this is whereby to ensure that Ackman doesn't look like a schmuck, if Icahn offloads the shares or sells the shares within 3 years and makes a profit from it, anything outside of 10% profit that Icahn makes, himself and Ackman will split those profits, so that Ackman, as I said, doesn't look like a schmuck. And what happens is that a year after Icahn buys those shares, Halwood Realty is merged with another company. Icahn gets $137 per share. Ackman waits for his call from Icahn to say, here's your 4.5 million profit. But Icahn doesn't ring him because Icahn says, no, I didn't sell those shares. The company merged. So technically, I didn't sell them, so I'm not going to pay you. Now, by all accounts, apparently, Ackman had a pretty watertight contract, and he sues Icahn. And this goes on for about 7 or 8 years until they eventually settle in 2009. And Icahn has to pay Ackman $9 million, $4.5 million for the profits and $4.5 million in penalties. This is nothing from Icahn. By this stage, Icahn is worth like $14 billion
but
or something.
But it's the principle of it.
It's the principle for two reasons. First of all, Icahn swears that they had a verbal agreement. He maintains full on that they had a verbal agreement. Now, I'm not too sure about that, because if they had a verbal agreement, how come Ackman had this watertight contract that the court looked at and said, yeah, he's got you banged to rights, Icahn. But I think what really pissed Icahn off was that after Ackman won that court case in 2009, he went to the press, and the New York Times did a really nice puff piece on him, saying how Ackman got won over on Icahn. And for Icahn, that really violates a code on Wall Street, in that you never rub it in the other guy's face, no matter how gratifying the win is. But this is Ackman. It's not enough that he wins. He needs everybody to know how right he is. And that is, I think, what really infuriates Icahn. So there you have the basis of this feud, and one of many of Ackman's former friends and investors who waits in the long grass for him. So that's one thing that comes out of the winding down of Gotham. The other thing that comes down from the winding down of Gotham Partners is that he started shorting just before they wound down into this company called MBIA, which was a huge bond insurer, and he believed that it was over leveraged. So he does a very public short on this for many years. Ackman isn't always a short seller. More often than not, he's an activist investor, but he does shorts at MBIA. Holds on to them for 5 years. Like, this is tenacious stuff, in fairness. You got to give him that. And eventually he was proven right, and MBIA eventually crashed in 2007. And Ackman made $1 billion for his investors out of that. And as one of the reports said, thus was born Mr. Ackman's near fanatical belief that he can see and fix what even those closest to the situation are blind to. So, and it also cemented his reputation. Like, this made him, put him in headlines. And by
Yeah.
this stage as well, he had started a new fund in 2004 called Pershing Square. Pershing Square had some big wins with McDonald's and Wendy's. In 2007, it had $5 billion in assets. And his MO was really to go big or go home. He took big risks.
Yeah, he
He
did.
really, he doesn't go in small. He goes in big, and that can lead to big wins. And that's why he was really doing well at this stage, but also big losses. He lost big in Target. He lost big in Borders. He lost very big and very publicly in JC Penney. And the Target one I mentioned specifically, it's important because he got an awful lot of his hedge fund buddies to go into a Target with him, and they ended up losing 1.5 billion. And my research showed that it wasn't losing the money that pissed off his fellow hedge funders. It was his attitude. He didn't really take responsibility for that loss, kind of maintaining that, it
Mm.
wasn't his fault. And that really
And
pissed them
and
off.
he doesn't make good then with other investments. And do these guys investing in the entire portfolio? Because overall, what you see kind of is a pattern of, okay, there's big losses, there's wins, but by and large, the portfolio or the total fund tends to come out pretty good.
Yeah, I think we will be doing an episode, even though most of this episode is on Ackman. I think we will eventually, when Ackman, retires, we'll do an episode on him, but I don't think his story is finished quite yet. I think
Yeah.
there's going to be more ups and downs. But in the target fund, no, I think most investors do invest in the whole fund. But for the target fund, this was, I gather, a separate investment
Mm,
because
mm.
all I heard was, my research shows that a lot of his buddies lost out big time on the target fund. So it seems like it was separate because overall Pershing Square is doing really well. Like by 2011, it's got 19 billion in assets,
Mm.
and it's been growing at a steady rate of nearly net returns of 21% since 2004. So things are going well. And I mentioned up to 2011 because 2011 is then when Herbalife enters the story.
Yeah.
And we're not really going to go into MLMs here, but uh, I mean, Herbalife is an MLM, a multi-level marketing. That's the business model it uses.
Did you ever in your early days get involved in any of those? Or
No, because
yeah,
they just stink to high heaven.
we did. I did when I was in school. Actually, we got involved in Amway.
Did you?
Yeah, yeah.
What do you mean we, the class, did?
No, a few of us. Yeah,
No way.
yeah, a few of us. Was
How did
four
that
or
work
five
out
of
for
us.
you?
I had a lot of cleaning products left over,
Yeah.
which I didn't really need as maybe a teenager.
Yeah.
But I think, on balance, I think it was quite interesting because they had an educational program. They had some really interesting motivational speakers who came over. So in terms of sort of developing some interest in business and personal development, it was kind of
Yeah.
interesting. Now you had to pay for all of the educational pieces, and that was part of sort of the reputational management then too. But yeah, on balance, lost money, but
Yeah.
not a negative experience, and I had a quite broad range of very effective products. So yeah, I mean, but
But is
but
your,
mm,
like, I have a very negative view of
mm,
MLMs.
mm,
Uh, to give our listeners some background, and we're not really going to go into
yeah,
MLMs, but I would recommend there's a podcast called The Dream, and season one of it does a really deep dive. Didn't get into season two, but season one is a really deep dive on MLMs, and it gives a really good overview,
wow,
or deep dive into what they're all about. So I'd recommend listening to that if you want to find out more. But an awful lot of MLMs are accused of being pyramid schemes.
yes,
Now, the FTC don't have a definition of a pyramid scheme, but the best one I found was as follows. An organization is deemed to be a pyramid scheme if the participants obtain their monetary benefits primarily from the recruitment rather than the sale of
yes,
goods and services to customers. So, in other words, if you make your money from recruiting more people to the network, and that's how you make your money rather than selling goods, then that's a pyramid scheme. Now, Herbalife pays distributors based on the products the distributors orders, not on what they sell, and on the products ordered by the distributors' 3 levels of recruits. So in other words, the distributors' direct recruits, the recruits, and the recruits, which
The
is called
the
the downline.
downstream or
The
downline, yeah.
downline, exactly. And while it's true that no distributor is paid exclusively for recruiting, because if they did, they'd be called a pyramid scheme, it's also true that no distributor will ever earn revenue without recruiting.
Yes.
And you mentioned Amway there. Amway kind of set the benchmark, because when the FTC took Amway to court in 1979, the upside of that, or the sort of benchmark they laid, was that 70% of sales have to come from outside the network. Okay,
Yeah.
which seems kind of clear, but it's not clear. Nothing with the MLMs and with Herbalife are clear,
No.
because they deliberately complicate their business models and distributor agreements to kind of obscure unfavorable practices. And an example is Herbalife. Back then, when we were looking at this story, 2011, 2012, the agreement they have with their distributors, Keith, runs to 124 pages.
My God.
Now, this is from a distributor who might be buying, say, about $3,000 worth of goods. Why would you need a
Yeah.
124-page agreement to buy $3,000 worth of goods? But what it does allow them to do, it allows them to sow an awful lot of confusion. They're able to say that, oh, we offer all our distributors full refunds. And yet, only 0.35% of our distributors actually look for a refund. So aren't we great? But the fact is that when you look into the fine print of this 124-page agreement, the buyback process is deliberately convoluted with lots of hidden costs, and it discourages any buyback. My take on MLMs is, I think they're just shady as hell, and I don't trust
Yeah.
them at all. I think if your product is good enough, which they all claim, Herbalife says our shake is the best. And for our listeners, Herbalife sells
Yes. Weight loss shakes.
weight loss shakes and other products. And if they claim that their shake is the best and that's why they can charge a premium for it, why not sell it on the market then? Why do you have to
Yeah.
sell it in this convoluted way?
Yeah.
It's not right.
So as somebody who's trying to recruit people kind of 30 years ago, the story was that the money for marketing and distributing and profit sharing with a retailer was plowed back into product
Yeah.
development. And, you know, I,
Yeah.
I think with the benefit of hindsight, you can look back, but there was an appeal to it. There was sort of
Oh, yeah.
you felt like you were surrounded by successful people. And in fairness, some of the people who would have got into an organization, either at a country level or an early foundation level, were obviously successful.
But
Um,
isn't that typical of a pyramid scheme?
yeah,
Whoever gets in
yeah,
early
yeah,
makes money, you
exactly,
know?
exactly, yeah. But yeah, it's an interesting model.
Yeah. But
And
anyway,
yeah, but back to
getting back to this
Herbalife. Yeah.
Herbalife. So the story of Herbalife is it was started in 1980 by a guy called Mark Hughes, hugely charismatic,
Mm,
but hugely controversial guy. Doesn't always tell the truth, which you would expect from somebody maybe who starts up an MLM. But as I said, very charismatic, great sales guy. His wife said he could sell snow to the Eskimos. And he starts by selling weight loss products out of the back of the car, this Formula One, a meal replacement shake. And
mm,
within 5 years, he's built it up to revenues of $300 million. So he's doing really, really well. Now, he keeps growing it up until about the year 2000. It has revenues of 1.7 billion. But then he
yeah.
dies after a 4-day binge on wine and prescription drugs. And after he dies, then it goes into a bit of a tailspin and it goes to a few different CEOs. But then 2 VCs buy it in 2002 for 350 million. And then they bring in this new CEO, a guy called Michael Johnson. Have you
Yeah.
seen Michael Johnson?
Yes. Yeah. A fascinating character, actually. He he seemed to reluctantly join. They really had to sell the business to him. He's an ex Disney guy, right?
Well, yeah. I mean, he was very, very high up in Disney,
Mm,
and he would have been in position for the top job because he was head of their international operations division, except for the fact that Bob Iger was also up for it.
yeah.
And Bob Iger had been, penciled in as the heir to I think it was Michael Eisner,
Yeah.
and so nobody else was going to get that top job.
Yeah, and
Bob
he
Iger was going
still
to get
hasn't
it.
gone anywhere.
He's back again.
Yeah.
We're going to do something on Disney. A few episodes on
Oh
Disney
yeah,
because there's
fantastic.
some brilliant stories in there. So yeah, he knows he's not going to get the top job, but still, Herbalife back then was, a dodgy company. But they approached him anyway, the VCs, and you'd wonder how they managed to convince him. But I'm guessing it was all those dollar bills, because he ended up getting a slice of the business, and over the course of his career with Herbalife, he earned over $275 million.
I'd say that might have had
So
something to do with it, although he did
yes,
say it sort of the product resonated with his healthy lifestyle because he was a competitive cyclist or something like that, wasn't he?
he very competitive cyclist, and he has this close cropped hair and these pointy ears, and as one of the articles said, he's a cross between Lance Armstrong and Mr. Spock, and
Full of
he is this.
compliments then.
But now, in fairness to him, he did a great job.
Yeah.
He made Herbalife a more professional organization. He built it up from revenues of 1.4 billion up to 4 billion in 2011. He The shares rose by 870% between 2008 and 2011. But in my mind, like, what he did was he put really nice lipstick on a pig, because I still think Herbalife, it still stinks, but he got it looking a little bit better, a little bit more professional. So that's where we're at with Herbalife come 2011. And how Herbalife gets onto the radar of Bill Ackman is that there's a company called the Indigo Group. Now, this is
Yeah.
the kind of company I would like to work for. This sounds like an interesting kind of business. They do deep dives on companies, and they're held on retainers by hedge fund companies like Bill Ackman's. They paid these companies like the Indigo Group about $10,000 a month as a retainer, and then the Indigo Group will do a deep dive on a company and present their results to the
Yes.
hedge
Yeah.
funders,
Yeah.
with a view to the hedge funds either taking a long position or a short position or whatever. And the Indigo Group present him with a report on Herbalife, and they say, this is a pyramid scheme. I think you should look at this. Now, what Ackman doesn't jump on it straight away,
Yeah.
because he's kind of thinking, well, what's the catalyst here? And the catalyst is what an awful lot of investors are looking for when they get a report like this. A catalyst is, what's the smoking gun? Is there anything here that will lead this company to disastrous results? Like, is there something here that's going to get the FTC to start investigating them, or is there something in their business cycle that's going to lead to a huge downturn?
Particularly a
And he put,
short seller, right? So
but yeah, if you're short selling, for Herbalife, that's what the Indigo Group were getting at. They
and
were saying,
should we talk a little bit about what short selling is? I mean, it's essentially
yes,
it's essentially making a bet that a stock will decrease in value.
yeah, you borrow the shares of a stockbroker or somebody who has those shares,
Yeah.
because you think that they're way too high. You sell them into the market at that high price, and then when the shares drop a few months later or a year later, you buy them at the reduced cost, give them back to the person you borrowed them from, and you pocket the difference.
Yeah.
While at the same time, the person you borrowed them from, you give them a small fee for doing business with them.
Yeah.
So
Perfect.
that's it. And apparently you can make, it's a risky one, because if it wins, you win, you make a nice bit of money. But if you lose, the shares can keep going up and up and up, and
Yeah.
you could end up losing a whole load of money. Which is why Bill Ackman said he didn't get into short selling an awful lot. It's a very risky business. So the Herbalife proposal is put in front of Ackman, and he's looking at it. He does a bit of digging, but he's not too sure. But the turn for him comes in May 2012, because Herbalife do a conference call where they're presenting their revenues with analysts. And on the call is a guy called David Einhorn. Now, David Einhorn at this stage was a very, very well-known short seller. He had made his name by shorting Lehman Brothers just before the crash. So he gets on this call and he asks the following question. How much of the final sales, this is of Herbalife products, are sold outside the network, and how much are consumed within the distributor base? So that's the question really that gets to the crux of any company that's an MLM, to try and find out, are you a pyramid scheme?
Yeah, and the book vividly paints a picture of fear in the room. when the caller is identified and the question is asked. They weren't expecting Einhorn to be on the
No,
call.
they weren't, and the very fact that he is on the call sends kind of jitters throughout Wall Street because people are thinking, "Oh, if Einhorn's taking
Yeah,
interest here, he's going to go
yeah.
short on this." And the fact as well that, as you said, it's fear, and as well as they fumble because they don't have the answer. Now you kind of think, how come they don't have the answer? I believe
Mm,
they don't have the answer because they say they don't have those facts. They don't have those facts because they don't want to know
yeah,
how much of their product is sold within the network, because knowing it would obviously, I would say, guarantee that they would be called a pyramid scheme, because most of their product is consumed within the network, and we'll get to that a bit later. But Des Walsh, who's the
yeah.
president of Herbalife, I'll tell you, Keith, of all the characters in this story, I think Des Walsh is the one who disappointed me the most
Because he's
because
Irish.
he's Irish. Yeah, he wears this green tie, he has this beautiful Irish accent, and us Irish don't have a lot going for us except for our accent and our bit of charm. And he uses this to promote an MLM, which really disappointed me. I don't like the guy at all. I just thought he was slippery. I thought he was a
Mm,
slippery guy.
yeah, yeah. I think
What, you
he
liked him?
certainly fumbled the ball. I think you have that sort of inherent. Well, I suppose we won't get into philosophy on this, but you either have that inherent sort of Irish regard, sneaking regard for a rogue,
Yeah, yeah.
and if he was too polished then and too successful, the old Irish begrudgery would come into it. So I was kind of rooting for the rogue a little bit. So
Well, I mean, there's definitely the rope, but I suppose I have such a dislike for MLMs. You know, they
yeah,
really, I just don't like the model, and I didn't like seeing an Irish guy pushing the MLM. But all the reports I had of him, like the American business reporters, really took to him. They really like him, so he does charm them really well. He's a great lad handler, that's for
yeah,
sure.
yeah.
But he drops the ball
He
here, and he
did.
sort of says, he said, "Oh, it's a 70%, right in line with the Amway ruling that said 70% has to be your sales." Now, all the reports said, of course, they said this figure was wrong, but none of the reports were able to say what the actual figure is, and nobody's ever able to tell me what the actual figure is.
Mm,
I even went as far, Keith, as emailing. There's a guy called Robert Fitzpatrick. He's in the podcast The Dream, and he's an expert on Ponzi schemes and on pyramids. He's
wow.
written a book on it. And I emailed him and asked him, "Do you know what the figure is?" And he gave me back a really long, very great answer. But at the same time, he said, "We're not able to get that figure. It's impossible to get that
In
figure."
the times of big data, and they have more information at their disposal now, it should be reasonably simple for the company to
But they
give that
don't want to
information.
get the
No,
figure.
exactly, exactly.
They don't want to get that figure. And what proves this is that later on, after Des Walsh has fumbled this figure, he comes out and he kind of says, "Well, look, we've always been very upfront and said that most of the consumption comes from people who sign up to our network and just want to consume the product themselves because they get a discount for it." But that doesn't make sense, because if they're signing up to the network, then they are within the network. So, they're not outside of the network, they're signing up. Also, he says people sign up to get a discount. I don't know how many consumers buy $3,000 worth of a consumer product just to get a discount. Nobody does it. Secondly, if they sign up to get a discount to get off a weight loss product or
Mm.
say a shake, why aren't they buying Slim Fast? It's about half the price. Even with the Herbalife discount, they're still paying more than they would for the competitor brand. So that doesn't make any sense. And Herbalife will say, "Well, that's because our product is so much better. That's why they're willing to pay a premium." And then you kind of go, "Well, if your product is so bloody good, why don't you just put out in the market?" So nothing about this makes any sense. But anyway,
Something's telling me here instinctively that you've reached a conclusion on what you think of that product came.
I've never tasted it. I've never tasted it, but I've never tasted Slim Fast either. But I suppose I've been tainted by the fact
Yeah,
that I have listened to the Dream podcast and it is very good. And anyway, it just always struck me as dodgy.
yeah, yeah.
If your product is so good, just put it out there. Anyway,
One tiny story just before we go too far off. You know Betsy DeVos, who was the education.
yes,
She's one of the Amway crew.
She is. That's the dream goes into that.
Oh,
The
does it?
podcast
Oh,
goes,
interesting.
yes, yes, yes.
Okay.
Her father started up Amway with, I think, 2 or 3 other people,
Yeah, there's
and they go
two
into
guys.
all the way that these MLMs have infiltrated
Yeah,
um,
Van Andel is
the
the other family, I think.
yes,
Yeah,
yeah.
yeah.
And for our listeners, that's one of the reasons. Some are probably saying, well, if it's so bad, how come these businesses have been going on for so long? Well, as you said there, what's her name, Betsy what?
DeVos. DeVos.
DeVos, she was in Trump's cabinet. Was she for education? I think
Education,
she was.
yeah, yeah.
Yeah. Um, her her father set up Amway. These MLMs have very, very strong ties to politicians, to political parties,
Yeah.
as well as this. An awful lot of the lawyers who work for the FTC, that's the Federal Trade Commission,
Mm.
who are meant to police these MLMs, an awful lot of those work for a few years in the FTC and then go off and get hugely paid jobs with the MLMs. So you've basically got the guys who are meant to be policing these MLMs go off and start working for them. So the MLMs are very aware as to how to uh, navigate all the rules and regulations. And also, you have these former FTC people who are now dealing with their colleagues in the FTC when they're
Exactly.
going to
Yeah. Yeah.
negotiate any deal.
And before we move on, just one more thing. I can remember opening up one of the boxes full of the products, and there
Yeah,
was a little envelope in it, and it was a car sticker.
yeah.
And they encouraged us at one of the conventions, put the car sticker on, and it was Free Trade Works, which is sort of a Reaganite type um, slogan. And
Yeah.
they wanted us to drive around Wicklow and Dublin and Ireland with Free Trade Works on the back of the car. Maybe not, but anyway, I
Yeah,
digress as usual.
so that's why. So MLMs have been allowed
Mm,
to operate, but they are always fighting, and this is another thing as to why we'll see how they manage to get by. They're used to fighting their corner. They're
yeah,
very
yeah.
skilled and very well versed. So now, Einhorn is on this call, and then Ackman is thrilled by this because now, well, Ackman says he's thrilled by this because he said now he doesn't have to be the public face of Herbalife. Now he can just buy shares in Herbalife and let Einhorn be the public face of this short.
Say it lasted 10
Because
minutes.
yeah, well, it didn't last long at all because he's thinking, okay, Einhorn is going to be presenting at this conference called the Sohn Conference. The Sohn Conference is this conference where
Mm,
investors stand up on stage and present their either short position or long position and give their reasons for it. It's called Talking Your Book. And everybody believed that Einhorn was going to be presenting Herbalife as his main presentation at this Sohn Conference. But he doesn't. He presents a different company altogether. So now Ackman has a decision. It's like, does he go public with this? Does he become the catalyst?
mm.
Does he become the public face? I don't think it was that hard a decision for Ackman at all, given his ego, his sense of, I'll use this word again because I love it, noblesse oblige. And he decides, you know what? I'm going to be the catalyst here.
Mm.
I'm going to be the public face of this. Even though in other articles he said he really didn't want to be this because it's such a grueling thing and he didn't want to, get out there. You can tell from
Yeah,
the documentary that he loves
yeah,
this.
yeah, yeah.
So
And how big was his position at the time that Einhorn sort of faint?
at the time, I'm not too sure, but very quickly when he decides to become the public
Mm.
face, he buys up again in typical fashion, go big or go home. He buys 20 million shares
Oh,
at a cost of about $48 each. He's got almost $1 billion now at this stage. By the time he decides, I'm going to become public. And in typical Ackman style, not only does he go big or go home in terms of buying shares, he goes big in terms of the publicity that he generates from it.
mm.
Because by this stage, Ackman is a very well-known business personality on Wall Street. He makes for good copy. He's invited onto these business, CNBC business shows and Fox business shows all the time. So he uses that to get a lot of publicity for this special Sohn conference that he's having on December the 20th. I tell you, Keith, I would not like to have been at this event. He goes on for 3.5 hours. He has 342 slides. I mean, Jesus Christ, like.
It's a one-man
And
show.
yeah. And he calls Herbalife. Now, despite the fact that it's 3.5 hours and it's 342 slides, he makes some valid points. He says
Mm.
that Herbalife is the best managed pyramid scheme in the world. He says Formula One, which is their replacement, their meal replacement shake. He says it's the only $2 billion brand that no one has heard of, which is true. I didn't
Yeah.
even know the name of their shake. He says that 88% of distributors make no money. He pointed out that in 2011, a Belgian court found Herbalife guilty of being a pyramid scheme. And he says that he expects the stock to go to zero. And what he says as well, I can't wrap my head around this. He says that when it does go to zero, when he does profit off this, he's going to give his personal profits to charity because he considered any proceeds from a corporation so villainous to be blood money. Now, okay, what he's doing here is he's putting himself morally above all of Wall Street, which is fine. But what I find preposterous here, Keith, is he's putting himself morally above his own investors. He's saying, if I make any money, this is blood money, so I'm not going to profit from this personally.
But
But all my investors in,
yeah.
in Pershing Square, they can take the blood money. You take the blood money, but I'm not going to. I'm above all that. I mean, it's so
ludicrous.
stupid. But it does have the desired effect, the presentation, because the stock over Christmas drops to $26. So things are going well for Bill. This is working out for him. But of course, there's a big problem because there's been a lot of people waiting in the long grass for Bill Ackman to make a mistake. And they see this as a mistake. Now, you might think, but why? Shares are down at $26. He's got Herbalife on the back foot here. But the cold calculating Wall Street investors who are, have been doing this for a long time, they're looking at this and they're kind of going, yeah, that's all well and good, but there was no smoking gun at the presentation.
Yeah.
Everything he gave, all the facts that he gave, while damning and while showing that there's something very shady about Herbalife, they're all out there.
Yeah, they were
There's nothing
already in
new
the
here.
public domain, right?
Yeah, but there's nothing new here. I mean, obviously Herbalife would, try and hide an awful lot of the facts in their 124-page agreement, but you just do a bit of digging, you'll find out, man, there's something very shady going on here. So there was nothing new here. And they also realized that Johnson had brought a lot of professionalism to Herbalife. They also realized that the day before Bill Ackman gave his presentation, Johnson came onto a CNBC show. And again, we have all these videos. I'll have them in our blog, and there's a link to it below the podcast. Johnson goes on to CNBC. Did you watch this?
No, I didn't watch that clip, no.
The night before Ackman's presentation, he goes on to CNBC and he is spitting fire. He is livid and he's going, Ackman's only doing this, and he's doing it at the end of the year, which a lot of people pointed out, so that his end of year results will look good. And he points out all the reasons as to why Ackman is doing that. And while you're listening to him, you're going, this guy is going nuts. Like, is this good for Herbalife? It is actually, because an awful lot of the investors looked at that and realized Herbalife are going to fight this tooth and nail. They have huge cash reserves. They're going to start buying back stock, which is going to potentially put a short squeeze on Ackman, which we'll talk about in a minute. And they also realize that Herbalife's revenues are still going really, really strong. So the share price is definitely undervalued at $26 when you take that into account. And they also realize that only 20% of Herbalife's revenues come from the US. So even if the FTC were to launch an investigation and impose huge penalties or even close down Herbalife's American operations, 80% of their revenues are coming from overseas. So an awful lot of the Wall Street guys who are waiting, as I said, in the long grass for Ackman, they're kind of going, okay, $26, I'm in. I'm going to start buying. And the first guy who starts buying is a guy called Daniel Loeb, a former friend of Ackman's, who lost out big time. I think he lost about $175 million in the Target investment. He starts buying, and he ends up buying over $300 million worth of Herbalife. Now, he doesn't hold on to it for too long. He holds on for it for a good few months and cashes out at $46 and makes a light with the money. But while he's buying and while he holds on to them for those good few months, he's putting pressure on Ackman.
Yeah.
And then at the same time, Herbalife starts doing a buyback. And not only do they do a buyback, they also retire the stock that they buy. So this is also putting further pressure on the shares, because we'll talk about the share price now, or squeeze in a minute. Icahn has also been waiting for his opportunity. And as soon as Ackman gives his presentation, Icahn starts buying at $26. And over the Christmas holidays, he sends all his associates out to do a deep dive on Herbalife. They talk to former FTC lawyers. They really do their due diligence, and they kind of go, this is way undervalued. We're going to buy in, and we're going to buy in big. And Icahn ends up buying 18.5% of Herbalife.
So this is revenge.
This is revenge, but it's also, Icahn wants revenge, but also
make money out
Mm,
of it.
mm.
Has gets the cherry on top as well. And as Icahn rightly points out, Ackman is in danger of being caught in a short squeeze. Now, I understand what short selling is. I do understand what short squeeze is in a way, but when it comes to these financial
Mm,
instruments, I have to quote the experts here. So this is what a short squeeze is. It's a feedback loop that occurs when excess demand for a stock pushes the prices up, pressuring the short sellers to cover their position, which requires them to buy stock, which further pushes the price back up. So when you're short selling, sometimes you
mm.
have to cover your position. And because you have Icahn, Loeb, Herbalife, all buying back stock and also giving the rest of the market confidence that, yeah, Herbalife is undervalued, more people are buying stock and it starts pushing the price up. And this puts a lot of pressure on
And
Ackman.
and
So
Herbalife's strategy of buying back the shares and retiring them reduced the number of shares available in the market. Was
exactly,
very clever.
exactly. Yeah, yeah. So this is all happening now. This is in early 2013. And it's a good story on Wall Street. People who are in the know are looking at this and kind of getting a bit of a giggle out of it. But it really gets catapulted into the stratosphere when we have this. I call it's a Jerry Springer Wall Street edition, because this is where Ackman is on a CNBC show with Scott Wapner, the guy who wrote the book that we
Mm,
read.
mm.
So he's on a phone interview with him where he's responding to some criticisms that Icahn is making about his Herbalife bet. But while he's on the call with Scott Wapner, Icahn calls in, and they put Icahn through. They say, now they do ask Ackman, they say, hey, Bill, we have Carl Icahn here, and he wants to come in on the call. And Bill Ackman says, yeah, okay, let him in. And I'll tell you, did you watch this video?
No, I didn't watch this video. I'm gonna
Okay,
watch it now.
everybody should watch it, because here's the opening lines of Carl Icahn. He says, and there's a few lines here. He says, "I've really had it with this Ackman guy. I went to a tough school in Queens, and they used to beat up the little Jewish boys. He was like one of these Jewish boys, crying that the world was taking advantage of him." And Icahn then went on to recount how he once had a dinner with Ackman, and he said, "I couldn't figure out if he was the most sanctimonious guy I ever met in my life or the most arrogant." And then he quotes former British Prime Minister Disraeli, when Disraeli is talking about a pompous assistant that worked with him. He said, "Young man, I'd be happy if I could be as sure about one thing in my life as you are sure of everything." So he lays into him like it's now it's TV gold, and it's one of the reasons I say it's the reason Scott Wapner, the journalist, he must be in the middle of this kind of going, "This is brilliant." I mean, apparently trading on Wall Street went down by 23% while this was going on, because all the traders just stopped and watched
So
TV.
huge,
Uh,
huge
it was
public spat.
it was brilliant.
And
So it goes on
how
for
did
about
Ackman
20 minutes.
defend himself?
You know what? In Ackman's defense, I know I'm giving him an awful kick in here. He was very cool and collected. He was very calm. He shoots back, but in a very calm voice. He says, "Icahn isn't an honest guy. This is not a guy who keeps his word. This is a guy
Oh,
this is a guy who takes advantage of the little people." Now, Ackman saying take advantage of the little people, you're kind of going, what? But anyway, he's very cool and collected. Icahn is really ripping. Icahn is mad as hell. They both give their own versions of the feud that started all this with the shares and the court case, and I get the impression that they both 100% believe their own version of what happened there. So it's hard to know
mm,
who's telling the
mm.
truth there. But I can also rightly point out that Ackman takes huge risk and is really exposing himself to the short squeeze. So it's a great interview. It's ridiculous, these two guys, having it out on public TV and calling each other names and all this, but it is TV gold. And I remember Christine Richards, she's the one who wrote the report for the Indigo group in the documentary Betting on
Mm,
Zero.
mm.
She said that this whole feud is kind of overshadowed the Herbalife story, but I don't agree. I think it brought it to the fore. It really, everybody knew about this story now. Everybody knew about the Herbalife bet. I mean, the book that we read wouldn't have been written if it wasn't
Yeah,
for this
yeah.
big feud. We wouldn't be doing this episode if it wasn't for this big feud. So it really brought it to the fore, and Icahn and Loeb, with their backing of Herbalife, is giving it this big boost. But then things get even worse for
Ackman in June 2013 because George Soros's fund starts investing in Herbalife, and they've got no skin in the game on a personal level. They're doing this just because they think Herbalife is undervalued and it's a good bet. And also in 2013, the Belgian court overrules their initial verdict that had said that Herbalife was a pyramid scheme. So there's a story in one of the magazines that I read, it might have been in the book as well, that Ackman has this fighter pilot ejector seat in his office
No,
as a
no.
reminder. No? Oh, he has a fighter pilot seat in his office as a reminder of when to bail. And you're kind of going, well, you should have bailed now because things are getting bad and you should have just cut your
Shouldn't have
losses.
got into the airplane.
Yeah, exactly. But he just couldn't help himself, Keith. He couldn't help himself. But he doesn't bail. He goes into overdrive and he spends over 50 million on an intense lobbying and PR campaign. He really doubles down and he goes very public on this. Now, the lobbying does pay pay dividends, as we'll show later, but it doesn't initially because as we move into 2014, things get even worse for Ackman. The New York Times publish a 4,400 word article where they detail his PR campaign, and they are able to show that there are 26 instances where the exact same letter, the exact same wording, purportedly written by 26 different people, is sent to legislators asking them to investigate Herbalife. As well as this, Ackman continues with his presentations where he overpromises and underdelivers. The presentation that we're referring to is at the very start of Betting on Zero, where he goes on and he gives another 3-hour presentation. And at the end of it, even members of the audience are exasperated. They're more or less, there's a Q&A after the presentation, and they're more or less asking Ackman, where's the beef?
Yeah.
You're giving us all this bad information on Herbalife, but that information is already out there. You're not coming out with anything new here. And what's even more humiliating for Ackman is that while he's giving this second presentation, Herbalife share prices is going up while he's talking. And at the end of the day of his presentation, their share price has gone up by 25%. And Herbalife executives are joking to themselves. They're kind of going, we want Ackman to present every day because he's doing us a huge favor here. And by the end of 2000 or by early 2014, as a result of all this, Herbalife shares are now at $84, higher than they've ever been. So he's in a bad position. He's in a bad position. And things aren't looking good for him. And one of the big reasons that, another thing, he doesn't have a smoking gun. But he's also, with all the money and all the investment that he's putting into it, he's not able to bring out any victims. There's not many people coming forward. Now, in Betting on Zero, you get the impression that there are loads of victims or that there are victims. But actually,
Protesters almost.
yeah, but there's only a handful of them. There's not, you don't have, like they have a few million distributors. And proof of this is in a class action that was taken or that was settled in 2015. And this is an interesting fact, Keith. 1.5 million distributors were contacted about this class action, and only 0.5% of them filed claims, which apparently, even by class action standards, is really
Tiny.
small. And when the claim was initially filed, Wall Street and investors expected Herbalife to have to pay out about $1 billion. In actual fact, they ended up paying 17.5 million. So I have to bring that up, that there wasn't a whole load of victims coming out. Now, my thesis behind that is because an awful lot of the so-called victims are the people who go into it kind of thinking, yeah, like you with Amway, you wouldn't have filed a case against Amway because you got into it kind of thinking, yeah, okay, I'm going to make a bit of money out of this. This is worth investing. And they end up with $3,000 worth of product and they realize that, this is really hard because the only way they're going to make money is by recruiting other people. So instead, what they do is they kind of go, screw it. You know what? I've got $3,000 worth of weight loss products. I'm just going to, consume them myself, give them to friends and family, and be done with
There's
it.
also
And that's
probably
why
the 120-page legal document you spoke about.
exactly 124 pages, Keith.
Yeah.
Don't forget those other 4 pages.
Was leaving out the signature part, but maybe there was kind of terms and conditions in there
Yeah,
too.
very well could be. Very well could be. But that's another reason. The FTC are saying to Ackman, we normally take cases when we hear loads of victims coming forward. So that's another reason. No smoking gun, no victims. And Ackman, by this stage, is under huge pressure. He's even close to considering to cover his entire short position, when in March 2014, his lobbying of FTC does pay off, because FTC announced that they're going to open an investigation into Herbalife. So this is significant. And what turns the tide even more is that for the first time in years and years, Herbalife for the next 2 quarters experienced their first drop in revenues.
Mm.
And so by the end of 2014, their shares now have dropped below $40. And Ackman's fund was on a high. His fund was up 35%, and he had over $20 billion in assets now. So things are now, they've turned the other way. Things are now looking good for
Yes.
Bill. Now he's on the high horse. But that's what I love about this story, Keith. It's full of twists and turns. And Ackman, again, goes big and go big or go home. He does another big bet on a company called Valiant. And this is important because it shows the position, or the sort of difficult position Ackman gets himself in as Herbalife case keeps going. So Valiant is a Canadian company,
Mm.
a pharma company, and Ackman buys into it in 2014. He buys into it late. Like, the story of Valiant has been going on for a while, and the shares are now at $161 when he gets into it. And for some reason, I can't figure out, Ackman is smitten by this company. And it wasn't, I'm not looking at this with hindsight. Even back then, people were saying, why is this company going so big? They considered it a roll-up company. In
Yeah,
other
so
words, a
it kept
company,
acquiring and acquiring.
it just kept acquiring and acquiring, and then it kept on cutting costs by cutting out research and development, which is what most roll-up companies do. They buy, grow by acquisition, and then cut costs.
Mm.
But Valiant did even worse than that. Valiant also made its profits by cutting R&D and then doing massive price gouging on really important drugs. Like, you're talking about a heart drug called Ispirel. It increased from $4,489 to
Oh.
$36,000 in 2 years. Another diabetes drug, it went from 90 pills, went from $900 to $10,000. So these were price gougers. And this is where Ackman's, this idea that I only invest in what's good for America, like, what a load of bullshit, because
Yeah.
any bit of due diligence would have shown that this company was price gouging to a huge degree. And politicians did bring it up. And Ackman came into hearings and kind of said, I wasn't aware of this. And this is another thing about Ackman. I forgot to mention, one of my sources was the Lex Friedman podcast. And Ackman did a big 3-hour interview with it.
I
And
only ever occasionally listen to Lex because it's such a commitment.
it is. It is. Well, that's my level of commitment to this podcast, Keith. I listen to 3 hours of Bill Ackman. And he can come across sometimes as being, oh yeah, he sounds all right. But the Valiant thing is important because, as we'll talk about it, he ended up losing a ton of money on the Valiant deal. And he sent out a letter to his investors saying, I take full responsibility. I'm 100% responsible for this Valiant deal. It's all my fault. He'll say that publicly, but personally that he doesn't believe he's wrong. He never believes he's wrong,
Mm.
because in the Lex Friedman podcast, when Valiant is brought up, he says, I was really busy with investors at that time and I was flying all around the country. I delegated Valiant
Oh.
to those within Pershing. And the implication being that if I had been involved in it myself, it wouldn't have happened. So while publicly he'll say, yeah, it was my mistake, personally, he thinks himself that he's never wrong. He actually blamed his subordinates on the Valiant
Who
deal.
he
And
hired. But
yes,
anyway.
who he hired as well. And anyway, he was very involved in Valiant. There's
Mm.
letters and emails going over between him and the CEO where he's praising the CEO.
Yeah.
He's gushing in his praise. So anyway, in 2014, he's buying Valiant. And in 2015, Valiant crashes because there's public hearings into their price gouging. At the same time, reports come out showing a total lack of transparency in how Valiant ran its business. Now, I won't hold Ackman accountable for that. Valiant was hiding the way it was doing certain
Mm.
parts of its business, but he knew all about the price gouging and all that. And the shares in Valiant started to tumble, and Ackman kept on holding on to him. Again, he should have known when to bail. I don't know why he has that fighter pilot seat in his office, because he doesn't seem to know
No.
what it's about at all. So 2015, Valiant is tanking now. And then Herbalife starts reporting strong earnings again. So even though the FTC investigation is ongoing, its stock price starts rising. It starts going above $60. And then 2016 comes along. Valiant ends up losing Ackman over $3 billion. So he loses tons of money. It's one of his worst deals. I think it is his worst deal ever. But in 2016, the FTC then also announced that they have come to a settlement with Herbalife. So this is even worse news for for Ackman. Did you dig into the FTC settlement at all?
Yeah,
Because I found this baffling.
I did. Yeah, I mean, it's pretty close to calling it. It's a bit of a walk like a duck, quack like a duck type story,
Yes,
but doesn't actually call them out as a
it's
pyramid scheme.
that's exactly my thoughts of it. They said the settlement that they charged Herbalife with. It said its compensation program doesn't incentivize retail sales, but rather focuses on the recruitment of additional participants who will fuel the enterprise by making wholesale purchase of the product. And the chairwoman said at the press conference when they announced this, reporters were saying, but it seems like you're doing everything but calling them a pyramid scheme. Why not? And the chairwoman said, my focus isn't on the label. And I quote, Herbalife were not determined not to be a pyramid scheme. So, in other words, what they are saying, this is really baffling. If they were not determined not to be a pyramid scheme, then by logic, that makes them a
Yeah,
pyramid scheme. So, why not call them that? And again, I suspect that it's the ties between the FTC and the MLM sector with former FTC executives working with industry, combined with the fact that these MLMs have been around for so long, have such strong ties with politicians
yeah,
and also with communities. I mean, the one thing you got to get out of this is that the Dream, the podcast mentioned, is very critical of MLMs, except for one part, and that's the whole. You talked about it briefly. The There's a community about
yeah,
it,
yeah.
and an awful lot of the people who are involved in MLMs, they talk about how, okay, yeah, I didn't make any money out of it, but I met some really good people and I learned an awful lot. And there's this aspect of it as well, even though, okay, but it was all done on deception and it wasn't very kosher, and you have this 124-page agreement. People do sometimes get a lot out of it. Now, that's not to take away from the fact that a lot of people then lose
Yeah,
money from it as
you
well.
might as well go to college if you want an education, because you're going to pay one way or
Yeah.
the other. But of
But
course,
anyway,
this FTC ruling, I guess, had it was interpreted slightly differently by the people who consumed it. Then, so I guess
yes.
Johnson went around sort of championing the vindication.
Oh, Johnson said it was even though the chairwoman said she had not determined it not to be a pyramid scheme, and even though they were fined $200 million and fundamental changes had to be made to restructure their business practices, they did, come down heavy enough on them. Johnson came out and said it was an acknowledgement that our business model is sound. Now, having said that, he left the business 4 months later, so I don't know what that says about what he thought about the ruling. But Wall Street made the determination, because it wasn't called a pyramid scheme, because it wasn't closed down, they saw it as a win for Herbalife, and the shares rallied. They got past $70. Ackman eventually, I think a year or two later, had to hold up his hands and say he thought maybe the restructuring would put
Mm,
pressure on Herbalife and they'd eventually, close down, but they didn't. Primarily as well, I presume, because an awful lot of their revenues weren't coming from America anyway. Eventually, he had to sell. He lost $1 billion on his Herbalife deal, and his funds went from 20 billion down to 11 billion, because with Valiant and everything, he was having a tough time of it. Was poor Bill, down to just 11 billion in funds. And Icahn held on to his shares and eventually cashed out in 2021 and pocketed 1.3 billion.
wow.
So now, so you would think there, okay, Icahn won, Ackman lost, Herbalife won. But if you look at it in the last year,
Yeah.
you'll see that whatever you might say about Bill Ackman, he does bounce back. And I think that probably comes down to the fact that he never thinks he's wrong. And if you never think you're wrong, you obviously have so much self belief that it's easy, or it's easier to bounce
Um,
back.
yeah, but didn't his planned IPO of Pershing, he
Now
had to
that was
pull
in
it a couple of
he
months
had to
ago?
pull that. Yeah, that's very recent, all right. But overall, Pershing Square, it's back up to $18 billion now. He's had a very steady rise. I think he's been given very good returns for the last 4 years. You
Mm.
are right about the recent IPO. He's had big wins with Chipotle and Alphabet. Icahn has had a bad year. He's lost 10 billion in net worth, and over the last few years, his net worth has gone from about 20 billion down to about 5.3 billion, mainly because in the last year, a short seller produced a report that highlighted some irregularities with the way in which his companies were structured, as well as something iffy about some of the loans that Icahn hadn't disclosed. So Icahn has had a pretty bad
Mm.
year, I feel, for Carl. And Herbalife has had it even worse. Herbalife's market cap has dropped down to 830 million, down from a high in 2019 of 7.4 billion. And even during the whole Icahn Ackman feud, it was always around 5 billion. So Herbalife has done very badly in the last few years. And Johnson even came back as CEO. So maybe Lance Armstrong stroke Mr. Spock will be able to steady the ship. But yeah, it was a fascinating story. I
What
loved
a
this.
saga.
Yeah, yeah.
Maybe Carl Icahn should spend more time on Twitter X like Bill, and his fortunes will turn around.
Well, that's the reason why. I mean, it seems like we've covered Bill Ackman in this podcast, but I've got a feeling with Ackman that
Hmm.
there's going to be another few twists and turns to the story, and I think we'll definitely do an episode on Ackman in the future. I think Icahn will. Icahn is he's well into his 80s now. He's coming near the end of his career, and I think we'll have to do
Yeah,
one on
his
Icahn.
origin story would be a fascinating one.
Yeah, yeah, and he's such a strong character. And even actually, strangely, they made up Ackman and Icahn, and very publicly on TV. I think one of them was being interviewed at this show that was being televised, and then they said, "And by the way, folks, we got a very special guest here." I think it was Icahn was being interviewed. We got a very special guest, and Ackman comes out from the corner of the stage, and they give each other a bear hug, and they're all friends and all that. So it works out well for the two of them. I can't understand how they become friends after calling each other all those names, but I
Or
suppose,
Ackman stole the limelight. I mean,
yeah,
if one was cynical, which of course,
he couldn't refuse a camera.
yeah, neither of us are, of course. But there you go.
Yeah, but yeah, great story. Really enjoyed it.
Cool. So on to the next one.
On to the next one. I've got. Oh no, it's your next
It
one. You've got the next
is,
one. Oh
yeah,
yeah,
yeah.
yeah, yeah. It's an interesting
It
one.
is,
Interesting
yeah,
one.
yeah.
I look forward to that.
From fairly recent history too. Cool. All right.
All
Talk
right,
to you
Keith.
soon.
I'll
Cheers.
talk to you. Take care.
Bye.
Bye.
Bye.